Well, hello traders and welcome to BCR's morning market analysis. We're kicking off today with a snapshot of key global markets, including the US dollar index, WTI, crude oil, gold, and the Australian dollar. So let's dive into the latest developments shaping the trading landscape today. First up, let's have a look at the DXY, the dollar index, which remains soft for a second consecutive trading session, trading around the 101 level. This follows weaker than expected US inflation data, with April's headline CPI falling to 2.3%, which is the lowest level since February 2021, and slightly below the forecast of 2.4%. This cooling inflation has shifted expectations around Fed's policy, with markets now anticipating less urgency for further rate cuts. Additionally, temporary tariff reductions between the US and China are helping ease trade tensions, offering the Fed more flexibility in its next move. On the technical front, the dollar index remains in a broader bearish trend. The RSI is neutral around 51.5. MACD leans modestly bullish, but overbought conditions on the RSI suggest selling pressure may persist. Key support lies near the psychological level of 100, with resistance sitting just above 101.3. Next up, let's have a look at WTI crude oil, which climbed nearly 2.6% midweek, reaching a 1 month high of 63.48. This move is underpinned by improved sentiment following tariff relief and softer US inflation readings, which lowered some recession fears. Trump's ongoing Middle East visit and a more neutral stance from Iran have also calmed geopolitical nerves, which of course supports prices. Meanwhile, strong demand from refined fuels continues to signal solid consumption. OPEC's plans to increase oil exports in the coming months, which could limit further gains. Technically, the bullish momentum is confirmed by a breakout above the previous $62 range and firm support above key moving averages. Indicators like RSI and MACD remain positive, suggesting upward momentum remains intact. Now, coming to gold, gold prices fell sharply again, marking the second major drop in three trading sessions. Price slipped below the $3,200 mark, reaching as low as $3,168. The move is driven by improved risk appetite and positive developments in the US trade negotiations with Japan and South Korea and China. The shift in sentiment away from safe haven assets like gold has overshadowed even a weaker dollar. Technically, gold is showing signs of a bearish reversal, with a double top pattern now in focus. Key support levels include 3150 and 3100, while resistance zones stretch from 3231 and $3,300. Lastly, let's have a look at the Australian dollar, which continued its advance, boosted by a weaker US dollar and stronger than expected wage data. Australia's Q1 wage price index rose 3.4% year on year, beating forecast and marking a solid recovery from the previous quarter. Political stability also contributed to the market's optimism following Prime Minister Albanese's re-election. The RBA is expected to proceed with a cautious rate cut path, with the year-end target cash rate now revised to 3.1%. From a technical standpoint, the Australian dollar remains bullish, trading above the 20-day SMA, with momentum supported by an RSI reading above 58. The pair is eyeing resistance around 65 cents and may look to revisit the 6-month high near the 61.15 level if it breaks 65 cents. Well, that concludes today's morning market analysis. Keep an eye on upcoming US retail sales and producer inflation data for further clues on where the markets may be headed next. As always, manage your risk and have a great trading day ahead.